The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, it was a fairly rough-looking market on Monday. Grains, we had some pressure in corn and beans. Cattle were ugly to start off the week. Now, the wheat market did find a little bit of green on the screen, so it wasn't all bad to start off the week, but there is definitely plenty to take a look at and be concerned about, I would say. Joining us to discuss things, John Heinberg with Total Farm Marketing is with us here on Market Talk today. John, always good to catch up with you and have a conversation. And, coming back off the weekend, not a great way to start off the week here, John. Just a lot of ugly things in this grain market and in the livestock market here, kicking things off on Monday.
Yeah, it started on Friday, especially in the grain market. That flip over in corn and beans on Friday was pretty dramatic. And, we took out a fairly key barrier on Thursday in the December corn charts, opens us up to the upside. We rallied to 509, hit that 100-day moving average, and it just looked like somebody piled on a brick ceiling over top of us there. Mm-hmm. Then we reversed back through that key moving average, or that key, trend line resistance which was going to turn into support. So that throws some sell signals into the market. So I'm a little cautious right now here that, this might be one of those opportunities, unfortunately, where this market says, let's see how good that low is. So we got to watch the demand. We got to watch what's happening there, at least in corn. Soybeans kind of followed suit with the volatility in that soybean meal market. That was the driver for the rally, was the big rally in meal. And, meal corrected back. Now, at least meal held on to support today. We broke through trend line resistance over top of the highs. We went back and retested that on Friday, retested that and held it again today. So that keeps me a little bit optimistic, at least maybe what meal could do. But then on top of that, you had a big sell-off in crude, which pulled on that bean oil market aggressively. That's what brought beans back down. So, yeah, we kind of bucked the trend today, at least finished mixed on the day overall. And again, that might be just some combination of some weather coming into play, maybe a little bit more demand than we think going on in that wheat market globally. So at least it was encouraging to see. Usually the more limiting of all the grains was wheat kind of hang in there for us things today. So tomorrow's going to be interesting. I got some data coming tonight. We'll see what harvest is. But then we'll just see how these grains want to handle, because right now the sellers look like they're back in control, unfortunately.
Well, and gold was down a little bit on Monday after a pretty sizable rally on Friday. The dollar was lower, though, but yet, to your point, energy falling seemed to kind of weigh on the grains, at least corn and soybeans, and I think some general harvest pressure. But I got to ask, John, when you look, especially at the grain markets, is this more technical, chart-related kind of selling? Is it macro-driven? What are your thoughts with just the overall tone and this selling pressure and volatility kind of coming back in here over the last few sessions?
I mean, to me today, especially in the corn market and the bean market, it looked a little bit more on the technical side. Just from the standpoint, we had our chance to possibly make a good move and we didn't get there. Then we fell back through where we could have held. And that just brings those sellers right back into this market to say, all right, you had your fun bulls. Here we go. We're going to take over again. So again, tomorrow's going to be fairly key, I think. You usually see selling in multiple day increments, 2-3 days. So we'll see if that holds in there today. We tried to get corn back to positive. We tried to get beans back to positive today, and it just didn't hold in there. And the basically end of the day is near the low of the day on the session. This is very disappointing, again, telling us who's in control right now. So again, tomorrow looks a little bit scary to me, at least in terms of how we're going to see things trade out. Do we break through the key barriers? December, it's 485. $5 handle on March corn. Okay, do we get back through that 12.80 window, $13 on beans, November, January, respectively? If we cross those barriers that held us the last time, that opens us, pretty wide open for a sizable move on the technical side, and that could give us that retest of the low, especially in the corn side of the market, which still obviously is struggling with the demand side. So, really the one that had the story was soybeans, and the corn story wasn't that strong overall, but at least we were seeing something that kind of maybe, helped perk this market up, but maybe that momentum's left us. We'll see.
So let's talk risk management here a little bit. I think a lot of farmers were maybe watching late last week some of those rallies above $5 D's corn, $13 Novi beans, and then we've given it all back and then some in 2 sessions. So risk management wise, we know there's been a fair amount of farmers, we've talked about this, who've been storing off the combine if they have the storage, but as they look at their marketing plan and they look at maybe just some concern for more downward potential here versus upward potential, I mean, what should they be thinking about risk management wise? Should they be changing something up? Should they be throwing some different wish orders out there? I mean, I know there's a lot that they could do here, but what's the smart risk management play here with all this volatility right now, John?
Let's consider the overall trend of the marketplace. Now, again, obviously this could be just a quick couple days setback and we turn higher. So what do we want to have? We want to have puts in the floor. March puts today, $5.20, not a lot of expense, keeps your upside, in front of you, but still protects you through pretty much a bunch of, the rest of the reports out to the end of the year, up to the 21st of February. To me, if you're moving grain in here, this is that window. You got to ask yourself, okay, then where's my risk in that regard? We are seeing some basis improvement. We are seeing some, reach out opportunities. I see it in beans, especially the river base has really improved. Some of that was tied to that big export inspections number I came off the books here today. So there does tell me there's some end user demand out there, and farmers are probably locking the door a little bit here in the bin and just saying, well, find a way to pay me. So I do think that was part of what happened. Everybody kind of looked at Friday and said, shoot, we're almost to 510. I got to move some bushels. And that kind of carried through the weekend. And then we see some panic selling, like, shoot, now I can't get 5, but I better get 490, So those things kind of come into play. Right now, again, if you're thinking about cash sales, see what your market is. If you've got the opportunity to do that, then we want to come back, either corner beans, make sure you're looking at those bull call strategies or call strategies over top, just in case things kind of fall apart. But again, to me, it's all about the floor. I think you keep it as simple as it possibly can. Cash sale, reown, or buy the put and hope your bushels can dig its heels in there. Don't forget about those interest charges. Those add into that cost. You might be locking in 10, 12, 15 cents a carry, protecting that $5 floor out in March, but you might spend more than that on interest charges when you could easily have moved the bushels with a little move higher in price.
What about 24 new crop as we maybe start to figure out various crop insurance numbers here and whatnot the next couple of months ahead? I mean, are you getting aggressive at all, or at least dipping the toe in the water on new crop 24 in this window, or is the biggest focus going to be on the current crop right now, John?
Obviously a lot of time between now and next year, and a lot of things can happen. Who knows what happens on the weather front, either here or abroad. And, so that keeps us into it. But at the same time, let's at least look at the base numbers where we could be. Do we plant 91, 92, 93 million acres of corn next year? We'll probably see some movement back to beans given some of the strength here in the marketplace. If that's the case, if we just hit trend line yields, if we put that number back in there again, we're going to follow a 15 bushel crop. Up with another 15 billion bushel crop, carry over already over 2 billion. That keeps me on the defensive until proven otherwise. So right now I think you got to dip the toe in 24, whether you use some type just flat out locking it in at 520 on a hedge to arrive, just getting that floor in, come back and use the ownership strategies down the road, but at least make sure your floor is in front of you. I usually at this time frame, you're thinking about paying for inputs for next year, maybe sell enough to cover those inputs at this time frame. And then kind of leave the rest of the bushels available to the market, regardless what you do. And any of these strategies, new or old, or where we're at in time frame, just make sure you have a balanced approach. approach to things. Every action should have a counter reaction. If you're making sales, keep the calls in. If you want to hold on to the bushels, make sure you got the floor in. So that way, at least you got a balanced approach to the market. And if we get a wild swing one way or another because of geopolitical, economic news, or something of that nature, at least you got that one portion covered, for your operation. So that's still going to be the key going forward, is just, again, balance, understand the risk, make sure where you're at. And I do think you need to step to toe in the next year at these price levels, at least maybe get something started, not sell the farm, but at least get something rolling.
We're having a conversation here today with John Heinberg from Total Farm Marketing. John, let's move over to livestock, and a really ugly day in cattle on Monday. And I'm not sure if we'll be able to find something too terribly positive to talk about here. But you look at Friday afternoon's cattle on feed report, pretty bearish. That placements number even higher than the highest estimate of pre-report expectations, which was a very wide window going into the report. It feels like that plus on feed up 1% really weighed on this cattle market. I mean, $6 lower on the board in many of these contracts. Just a really rough day in both lives and feeders on Monday, John.
Yeah, very much so. Limit down on the February live cattle today, pushing that same limit area on feeders. Have to watch what the limits will be tomorrow, likely expanded. So that could even put us up to more aggressive selling if we see it. And that's really what it was. It was a technical breakthrough today. We had some pretty key supports. We were watching those. We gapped open to the downside this morning off that cattle on feed report. I was really curious to see how the cattle market was going to handle that. We put a lot of negative already into the marketplace. Then we saw cash come back and be a little bit higher last week. Now we're running at a really big discount to the cash. So it feels like maybe we got a little bit of a basis movement here in terms of futures versus that cash price. With that, tomorrow will be very interesting to see where we go to. We've got another downside target, probably about the 175 area, 176 December. That's a 200-day moving average. That's always one of those swing moving averages. But I keep looking at my longer term charts. I got this weekly chart I've been following. It goes all the way back to 2020. Today we broke down to the next level, and if we can't hold here, we could very well go to the bottom of this channel, still be trending higher overall since 2020. But again, we got a possible move another, $8 down to the 170 area to hit the bottom of that channel. We haven't been there in a while, but again, the market could still be trending higher. So to me, I'm kind of looking at maybe the first quarter, end of the year, could be a little bit tough. Pressured prices, the money's moved to the sidelines, all the geopolitical risks, interest rate concerns, things that we're seeing there just kind of made the market tired. But again, cattle numbers still are tight, even though we saw some jump in these numbers on this last report. Demand still looks good, and I think Christmas demand for rib and things will be a big factor in terms of where prices end the year at. But then we could see things come back again into another run at things next year. I'm still a little bit bullish the cattle market, but right now I am not a buyer. And, we've talked about it for weeks. Make sure you got some safety valve defense in, because now you see why. Because when the cattle market wants to move, just like the hog market, it can go extremely quickly.
Well, and that's what I'm concerned about here, John, is that, I know we have the fourth quarter here. We have the holidays coming up that could spur some demand. But on the flip side, on the domestic demand front, you and I have talked about this before, is that, credit card debt, everything else, worries about the economy. Are people really going to be buying, a lot of beef here during the holidays? That's going to be a big question. We're out of the summer grilling season. And this cattle market overall has been at such high levels for so long. I'm a little worried, is this the correction in the cattle market, the long awaited correction? Because as we know, markets that go up have to come down at some point, John.
Yeah, and I saw somebody use the reference today that maybe the cattle market's the canary in the coal mine to everything. And, and I'm kind of like, that might not be a bad analogy because, again, if the consumer dollar is a concern, the lack of demand coming possibly because of that tight consumer dollar, when does that affect things in terms of industry, in terms of the equity markets, higher fuel costs, all those things coming into play. Maybe today it was the indicator for the inflation side that the cattle market was first to go and things could keep coming. So We'll see. I think it's going to be a very interesting end of the year, just with everything going on between the U.S. macroeconomic situations, obviously the global situation in terms of what's happening with the two different wars and, all the issues that are going on globally. That, again, maybe just this cattle market was the tip of the iceberg here. So it does make me very, very cautious, these markets, regardless. And again, like we said, you see how fast money can quickly move out of these markets if it wants to. A $6 down day, a $7 down day in feeders, and it's a pretty big hit on the bottom line in a matter of 5-6 hours, in terms of price movement.
Yeah, very, very big hit. Hogs were down a little bit in comparison to cattle. It was a pretty good day in hogs, but to what we've seen as well, I mean, D's hogs, $66. This hog market is down, kind of churning around some new lows, it feels like here, and one has to wonder if we can find any support in this hog market either, John.
Yeah, no, to me, it's on a bit of a slippery slope. I actually tried to be positive to start today, but I think when cattle market really kicked in and it's got the selling going, the hogs just kind of fell in sympathy here. Again, new lows on that December hog futures, challenging down to that window. We need to see if that can hold. It looks a little scary to me again right now, too. Same problem, though. We found too many more animals, and that there's really not a demand for the packer, especially in the hog market, to bid up here. So as we continue to see those fundamentals soften, the direction of least path of least resistance right now for hogs is probably still grinding lower until we have a reason to turn this thing back around.
John, dairy market trade looked a little mixed on Monday. What's your thoughts on what we're seeing over there?
That market's gotten itself a little bit back into a sideways trading range, maybe building a bit of a channel. Saw a heck of a run out to $18 last week, and then they kind of rolled over real quick. So now it looks like we got a wide trading range, $18 on the top, $18.50 on the top, 17 on the bottom, and we're just going to work back and forth based on cheese trade. Cheese trade's really kind of flattened out, but at least we got some value in there again. So to me, I think if you're trading above 18, you're in value in the milk market. And I think if we get sub 17, it might be a little bit on the cheap side. But again, right now, it's just going to look like it's working itself back and forth between highs and lows.
John, great thoughts as always. Before we let you go, anything final you want to share or reiterate for folks today?
Just because you look at markets and you sit there and say, well, it needs to. It doesn't need to. Markets don't sometimes need reasons to go one way or another. I mean, we saw that on Friday. There wasn't really a trigger to get that grain market to flip over other than it just went high enough too fast. And then we saw the funds and the sellers kick back in. Now we'll see if they'll probably take it, obviously, too far to the downside, and then things will stabilize out. But again, it still comes down to we got to move product. We need to see those demand stories. That was some of the rumors. We were seeing grain getting possibly bought out of the PNW. Nothing's been confirmed, and it sounds like those were just rumors, and I think that's some of the reason the market got so grumpy. But again, the macro side of things just makes me feel a little nervous right now, so obviously protect the value that's here. I'd rather be wrong with puts and watch your bushels go up than be sitting on bushels and watch prices go down.
John, if folks have questions, they want to reach out to you, they could do that very easily, I know. What's the best way to reach you there at Total Farm Marketing?
Feel free to reach out anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, the website of ours, totalfarmmarketing.com.
Fantastic. John Heinberg with Total Farm Marketing. Thanks for joining us on Market Talk today. Have a great one. We'll talk to you next week.
So, sounds good. Have a great week.
And that's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.